Let's talk some JPMorgan, though, Jim. A pretty nice beat, $2 billion of reserve releases, average loans up 6. That's going to be an interesting story to tell.
I'm sick of the following. They put a great number. You look at it in vacuum. Seems really strong. Investment banking really strong. Assets gathering really strong. Obviously, M&A strong. The credit card looks strong. And then you start hearing things where, see this, the stock goes up, and then it starts ticking down. Now, suddenly everyone's looking at how credit cards weakening. Can people just understand, and David, you know this better than anyone, that this is a stock that has a history of opening up and then going down, and we are part of that history once again.
There are people who keep these statistics, but I can't remember a quarterly report from JPMorgan where the stock moved higher, or at least higher in a significant way, maybe by pennies. But there is rarely a positive response, it seems, to their numbers, despite the fact that we typically sit here and say these look pretty good.
Well, it's been a good stock going into the quarter. It had a great move, but there's a recognition when we start getting there that, you know what, this company is not a member of FANG. This company is not a super high-tech HubSpot company. It's an old, good company. And when you have comments like Jamie is giving the other day about how Bitcoin is worthless, I mean, the world is flat. I work there. I'm trying to get my Bitcoin moved over to JPMorgan. Why? Because then I know it'll exist. It won't just, go away. In the meantime, he tells me it's a fraud. Now, we have to stop with this JPMorgan obsession because it does have a higher price-earnings multiple. But, David, these numbers are excellent, and it means nothing to the market. So what does that say?
I'm not sure what it says. I would point out, though, that there is a period of time after they report earnings, typically when the stock starts to move up, because you wouldn't have a stock that's up 64% over the last 12 months.
You know what plan that? You know what period that is? I'll explain to David the way it works. What's going to happen? You want to focus here for a second?
I'm listening. I was also reading what Jamie had to say.
He doesn't help the stock at all.
I'm doing both.
What happens is by this time next week, we realize it was the best of the quarters, and we buy. I used to say to my friend Mr. Evangelisti, Joe, it's Trish on now, that Joe, delay your reporting for 1 week. Joe was the concierge. It's the greatest. We all know Joe.
Yes, head of Corp Com.
Yeah, he's got a place near me in Ocean Grove. He's dynamite. And I used to say, just report a week from now, and everyone will realize that you're the best. And he would laugh. But the fact is that they are the best. And when we see a week from now, we'll say, why did we sell it? And then people start buying it again.
Yeah, investment banking up 45.
Look at that.
Combined debit and credit card spend now up 25 over 2019. In Q1, it was up only 10 from those levels.
It's a fintech.
But to David's point, KBE is once again at some resistance levels. It's been hard to break through.
I know. It's discouraging to me. And then we'll get Johnson & Johnson. The stock will be up 5. Same price levels. Remember, why will it be up 5? Well, because the stock had sold down in anticipation. So we had JPMorgan going up, 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 and now we realize, well, it was going up because of this. And then, you know what JPMorgan is not, David?
What?
It's not a meme stock.
No, it is not, and nor will it ever be, would be my guess.
It's a real company.